check this out. The IRS trumps your divorce decree. And here's what I mean. The custodial parent can be set by the family court. However, the IRS is going to look at certain rules. They're going to look at who did the child spend the most time with during the year. The way they determine this is overnight stays. Okay. And there are 365 days in most years, with the exception of a leap year. So we take a look at whose roof was the child under more than half the year. Then we take a look at who maintained the household where the child lived, who paid more than half of the expenses. Then let's say it's even, right? Because the child went to camp, went to grandparents, whatever. Let's say it's even. Then we have tiebreaker rules. And these rules don't always result in the same outcome as the divorce decree.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 47 of the Tax Relief with Timalyn Bowens podcast. In today's episode, I am going to be covering a life event that at times not only can cause a shift in your life, but also a shift within your financial situation, specifically your taxes. So, in today's episode, we are going to be covering divorce and taxes. All right. Just this week, I spoke with a client that has been with me for a few years. And, you know, this situation isn't unique to this client. As we were catching up, they said, "Hey, and I also need to let you know that my spouse and I filed for divorce last year. It's not finalized yet, but I know that this could potentially affect our taxes." The reason I say this isn't unique is because when you go into marriage, you don't anticipate separating or divorcing, but it happens. I actually have this conversation at least once a year since I started my career. Sometimes you can see it coming, sometimes you can't. And when your life feels like it's in a whirlwind, whether you feel that people should congratulate you for getting divorced or they should mourn with you for getting divorced, your taxes aren't always the first thing that you're going to think about, right? So today I just want to cover three things that involve the repercussions of filing divorce and needing to deal with your taxes. And with these three things, I want to give a disclaimer that these are not the only things that you should consider. These are just three of the top things. All right. So if you're a tax professional listening to this, I am actually teaching a class on divorce and taxes coming up on the My CPE platform. And if you're a subscriber to Think Outside the Tax Box, I've also done a class with them. There's an article out where I dive into deeper topics such as property settlements and transfers, qualified domestic relations orders. I'm not going to be able to cover all that today in this 15-minute episode, but what I am going to touch on is the filing status, right? Because that's going to change. And depending on when the divorce is finalized, is going to be critical in figuring out what filing status you qualify for when you go to file your taxes. The next thing that I want to cover is who is going to claim the dependents, if there are any, moving forward. Since the Tax Cut and Job Act, there are some things that are different in regards to income after being divorced, what counts as income, what qualifies as non-taxable income. And then the rules have also changed for who gets to claim the child because we don't have exemptions. So now it's all or nothing. All right. And then last but not least, of course, we have to keep it in my wheelhouse. We're going to talk about what to do if there's a joint tax liability, but you're no longer together. Okay. So as I was talking to the client this year, um, they were thinking a little bit into the future more as far as their taxes than a lot of other people I've talked to. And they were wanting to know, like, how do I file? Well, here's the thing. It depends on whether or not this is an amicable divorce, right? If you all are getting along and the divorce was not finalized by the end of the tax year, technically, legally, you can still file as married filing jointly. Now, if there is a tax liability, this is when you may want to consider not filing together, right? But married filing jointly is an option. Then, of course, we have married filing separately. If you all aren't really getting along, even if there is going to be a refund, then you might want to consider married filing separately because even if there is a refund, you don't have to worry about splitting that. If there's a liability, you don't have to take part in the other person's liability, right? However, going into the year, if you were planning on being married at the end and you work a W-2 job, you most likely had your withholding set for married filing jointly. Once you drop down to married filing separately, you have the same tax brackets as a taxpayer that is filing as single, which means that more of your income is going to get taxed at a higher rate. So, let me give you a brief example. For married filing jointly, the standard deduction is roughly, this is not exact, it's roughly 27,000 this year. All right? And we're in 2024 getting ready to file 2023 returns. If we're looking at single, we're dropping down to roughly 13,000. Okay? Now, even when that being said, a person that is single or married filing separately is going to stay in the 10% and 12% tax brackets for a shorter amount of time, or I guess I should say at a lower income level than married filing jointly. If we're looking at a married filing jointly couple, they're not going to jump up to 22% until they reach almost $100,000 in gross income. Okay. However, if we are looking at a single taxpayer or married filing separately, because remember that's the same thing as far as the tax schedules, they're going to jump up to 22% when they get closer to $55,000 in income. So if you had your W-4 withholding set at married filing jointly, even if you made, let's say you made 50,000 and your spouse made 50,000, your withholding is going to only cover 12%. However, let me go let me go back a little bit. So let's bump it up a little bit higher than 50. Just for the sake, I know you guys are technical, you're gonna go back and look at the numbers, and I'm not looking at numbers right now. Let's just say that you both made one of you made 50 and one of you made 60. For the spouse that made the 60, their withholding is going to still be closer to that 12%, but after separating, if they decide to file as married filing separately, they all of a sudden are gonna get this huge jump to where they're getting taxed at 22%, but withholding was only at 12. So, working together to get this divorce finalized, part of that may be filing as married filing jointly to receive the best tax benefit for both parties. Now, when it comes to splitting a refund, there is a spot on your 1040 where you can have an additional form filed where you can split a tax refund. It can go into two separate accounts. Now, you may need the help of the court to determine who gets what, right? And allocating that, but that is an option. Something else I covered with this client, we also have to take into consideration if we have dependents involved, all right? And if we do have dependents involved, was this couple separated at all during the tax year? And if the answer is yes, they were separated, then we look and see were they separated the last 6 months of the year. And by separated, I mean they did not live in the same residence, not they just weren't getting along. Okay. So when we take a look at that, if they weren't living together the last 6 months and we have a parent that did take care of more than half of the dependent's expenses, we have a situation, even if they were not legally divorced at the end of the year, that the parent that did not have the child still has the option to do marriage filing jointly if the other spouse complies and agrees, or marriage filing separately. Okay. If the parent with a dependent, when we look at them, they have three options. They can do marriage filing jointly, of course, if the other spouse complies. They can do marriage filing separately, but they also have the option to do head of household because for the last 6 months of the tax year, they were legally separated and they did maintain the household and take care of more than half of the expenses for that dependent. Now, the difference with that is why is that better than married filing separately? Why is there any difference? The tax brackets are a little softer, not quite as good as married filing jointly, but there's more of a benefit there with head of household. So again, they're not going to jump up to that 22% tax bracket as fast. And then in addition to that, the standard deduction is going to also be higher. It's going to be roughly 19,000. So when you were working on something like this, it is really good to actually, if you don't have a professional prepare the return, at least have a consultation with one so you know what all of your options are. Okay. So let's move on to if there is a child involved. Oh, but before I do, if you were divorced though, as of December 31st of the tax year, then married filing separately, married filing jointly is not an option. You were divorced. So your options are filing as single or head of household if you had the dependent. But moving on to the dependent, how do we know who gets to claim the child? All right. Again, if things are amicable, you could have whoever in the divorce decree is the custodial parent fill out Form 8332. And this is what I always recommend for divorcees to do while they are still getting along, even if they aren't getting along, especially if they aren't getting along. Form 8332 is a release or revocation of release of claim to exemption for a child by custodial parent. I mentioned the Tax Cut and Job Act earlier because under that, we no longer have exemptions. So it used to be pre TCGA, Tax Cut and Job Act, that you had an exemption for each person that was on the return. But then, in addition to that, for children, you also had the child tax credit, additional child tax credit, dependent care credit, whichever of those apply, right? Well, now that there are no exemptions, it's either all or nothing. The custodial parent is who gets to claim the child tax credit. However, again, if we're looking at an amicable situation, a release to claim the exemption can be given by the custodial parent. Now, the divorce decree, family court may decide on who the custodial parent is. That is who needs to sign the release, and this form is very specific as to which years they are letting the other parent claim the child. This keeps things nice and easy, but divorce isn't always nice and easy. So let me give you a heads up. When you go to e-file a return, there is nothing to block a child from being claimed. It's almost as if you're racing to see who can claim the child first, because here's what will happen. I have your child's social security information. I could put them on my return if I wanted to. Now, I wouldn't do that. This is just an example. But if I were to do that, it would go through the system. Then, when you as the parent come to claim, your return would get rejected because the social security number has already been used. I see this happen so often between divorcees or sometimes just parents that maybe they weren't married, but they share a child and they're no longer together. Having Form 8332 helps you with the red tape because here's what happens. If you were rightfully supposed to claim your child, you can still do that, but you have to go through a lot of red tape to show the IRS, like, hey, I was the custodial parent. I should have claimed them. And then they'll review your ex's return. But check this out, the IRS trumps your divorce decree. And here's what I mean. The custodial parent can be set by the family court. However, the IRS is going to look at certain rules. They're going to look at who did the child spend the most time with during the year. The way they determine this is overnight stays. Okay. And there are 365 days in most years, with the exception of a leap year. So we take a look at whose roof was the child under more than half the year. Then we take a look at who maintained the household where the child lived, who paid more than half of the expenses. Then let's say it's even, right? Because the child went to camp, went to grandparents, whatever. Let's say it's even. Then we have tiebreaker rules. And these rules don't always result in the same outcome as the divorce decree. So that's another reason why it's very important, in my professional opinion, to go ahead and have Form 8332 filled out so you know in advance what years you're claiming your child. And even with that being said, it protects your ex. And I'm saying this because this is another reason to have them sit down and sign it. It protects them from you being spiteful later and trying to claim the child. And it also protects you because they know they've signed this form with the IRS like, hey, I'm not supposed to, out of spite, claim the child when I'm not supposed to. Right. And in the event that they do, when you send your information to the IRS to say, hey, I was supposed to claim this child, you have the 8332 that you can send in as well. All right. So, if you want more information on that, I do have a podcast episode on who should claim the child. I think it's after a breakup. It will be linked in the show notes, but there is also an article on the tax tips with Timalyn uh, blog at Bowen's Tax Solutions. So, last and not least, and I know I'm over time, we're going to take a look at back taxes. Now, if you've checked out this podcast, you know that this liability, if you sign the return, is joint. It doesn't just go away because of the divorce. It doesn't matter what your divorce decree says either. The IRS is still looking at you both as being responsible for this debt. Now, we can go back and look at injured spouse relief and we can look at innocent spouse relief. If you knew that your ex was doing illegal things, claim credits that you didn't qualify for, that type of thing, that's going to qualify for innocent spouse relief, which we've talked about in a previous episode, right? If you had income and you had withholding and you want to go back to get what would have been a refund for you instead of it going towards your ex's debt, you have a limited amount of time to file those injured spouse forms. All right. But you do have the options. Now, within the divorce decree, if they determine that the debt is, let's say your ex's, right? But you're the only one that's actually paying the IRS. If you do that, you have a potential argument to go back to court and get that money from your ex if you show that you paid it. Okay. But remember, I'm a tax expert. I give you that disclaimer right now. I don't know how the jurisdiction works in your state, but that's typically what I have seen done and done successfully. All right. Now I'm over time. I hope this episode was helpful. As always, And please, please, please don't try to go about this blindly. It doesn't have to be me, but make sure you get the help you need. If innocent spouse relief is something that you're like, hey, I believe I'm eligible for, go to bowenstaxsolutions.com, book that consultation with me, right? But here's the other thing. If you found this helpful, I would love if you would do me a favor and share this with friends and family members that are going through a custody battle right now. Or even if they're not going through a custody battle, if they're going through a divorce, if you would share that with them, that would mean the world to me because you all know I'm on a personal mission to fill the tax literacy gap one taxpayer at a time. And in addition to that, before I go, please, please, please consider working with a tax professional as you are going through this so that you don't make any tax situation that you do have right now worse. All right? I'll see you all next episode. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.